to the School of Stocks. I'm your host, Victor Dungo. Today, we shall be asking the question, in choosing a company, do you do the numbers first before asking if the company is a monopoly, if their products are resistant to substitution, if they have patents and licenses, if they have a brand identity or economics of scale? It is almost like the question of, is it the chicken or the egg first? Well, for me, the first filter I want to apply in the natural course of things is to do the numbers first, to see if the business actually has good revenue, then also to see if the company has minimal expenses, and to see if the company, after expensing things, they have a good percentage left over as operating profit. Of course, I want to understand that this operating profit, when I adjust it for owner's earning, I would have, when I do the returns on invested capital, I will have a good percentage of return on invested capital. So if you quickly run through this, and of course you want to check if the company is being fed by external money, aka borrowing new money or asking new shareholders to come and help it fund its operation. So good money management. So if you quickly browse through the financial statements to sort this out, then you can say, well, this company does not have good revenue, it doesn't have minimal expenses, it doesn't have good operating profit when as a percentage, it doesn't have good return on invested capital, and also it has poor management. Of course, if you see such a company, you will not bother to want to investigate further. It goes on to tell you that the company is average. So you don't want to invest your money in average company. So that is that. But if you then go ahead and then you see that the revenue is solid, and then the expenses is minimal, a good percentage of their operating profit is left, and then you go ahead and make your calculation, and then very quickly you establish that their return on invested capital is good, and then finally you check they have good money management. If they tick all these boxes, then you might want to proceed further to now understand how they generate the revenue they generate, if they are a super brand, if they have what you call near monopoly, if they have economics of scale, they have patents, they have licenses, if their products are resistant to substitution. For me, this will form the skeleton. Then the quality of the business will form the flesh. So in that way, once you find your skeleton, you add your body, then both will now help you see if this is a wonderful company to actually invest in. Well, if you do it the other way around, yes, you might succeed in getting one or two companies out there that you know that have common products. Apple, for instance, you will succeed as well. But the thing is, there is a limitation to your awareness of these super brands, of these popular products. There are a lot of other companies that are out there that have better returns than Apple that you miss. They are not known to you. In other words, if you do the quantitative analysis of the stocks first, there are stocks that will jump at you. They will jump at you, and then you can build a skeleton and then arrange the body on top of the skeleton to form the human being. Like I said, you can always do it the other way around, but it is going to limit the number of stocks that you are able to access to find really wonderful opportunities. And then there is another way to invest where you invest below the net asset value. So you are looking at buying $1 for cents. So let's say you are buying $1 for maybe 20 cents, 25 cents. Those kind of opportunities, you need to find them in purely mathematical form. All in all, the choice is entirely yours. You can choose to build the body before the skeleton, or you can choose to build the skeleton and add the body to it. If you choose to build the skeleton before the body, it is going to improve your chances of finding very many wonderful companies to evaluate and make your choice out of. But if you choose to build the body, go for quality first before you go for the numbers, then perhaps it's going to limit your awareness of the availability of other much more wonderful opportunities out there. Thank you for watching, and have a very wonderful day.